Hi everyone. In this session, we're going to understand one important BRSR core question under Principle 1 called Openness of Business. The term sounds a bit abstract, but the idea is simple. SEBI wants to see how open and transparent a company is in the way it does business, who it buys from, who it sells to, and how much of that business happens through trading houses, dealers, and related parties. If we understand this one concept clearly, many doubts around concentration of purchases, concentration of sales, and related party transactions will automatically become clear. Let's first understand what SEBI actually asks in BRSR core under openness of business. There are three parts. Number 1, concentration of purchases. Number 2, concentration of sales. Number 3, share of related party transactions in purchases, sales, loans, advances, and investments. All of this is reported in the form of percentages in a small table. The purpose is to show how diversified or concentrated our business relationships are, and whether there could be any hidden risks or conflicts of interest. Now let's talk about concentration of purchases. SEBI wants to know how much of our total purchases are routed through trading houses, how many such trading houses we use, and how much business is concentrated in the top few of them. Why is this important? Because if a company is heavily dependent on a small number of intermediaries, it becomes vulnerable. If one or two of these trading houses stop supplying, or if there is any conflict of interest, the company can face serious disruption. So concentration of purchases is essentially about supplier dependence and transparency in sourcing. Let's clarify the term trading house or trading partner. In simple language, a trading house is a company that mainly buys goods and sells them onwards, usually without doing any significant manufacturing itself. It may work in large volumes, across multiple products, and often sits between the original producer and the final customer. For a manufacturing company, typical trading partners could be steel traders, chemical distributors, commodity traders, or stockists. 1. For a service company, it could be software resellers, hardware distributors, travel agents, or ticketing platforms. So when BRSR Core talks about trading houses on the purchase side, it is basically asking, how much of your buying is going through intermediaries who only trade, instead of buying directly from the original source? Let's take a simple example. Imagine a steel manufacturer that needs iron ore, coal, and alloys. It has two choices. It can buy directly from mines and producers, or it can buy through a trading house. Now suppose 70% of its raw material purchases come through just 2 trading houses. If those trading houses are also related to the promoters or group companies, investors and regulators will definitely want to know that. This is exactly why SEBI asks for concentration of purchases through trading houses. It reveals how much we depend on intermediaries and whether there is any risk of conflict of interest. Now let's move from purchases to sales. On the sales side, BRSR Core talks about dealers and distributors. These are also trading partners, but now they are on the customer side. A dealer or distributor buys products from the company and then resells them to retailers or end customers. They often have defined territories and get margins or incentives, right? So yes, dealers and distributors are trading partners, but specifically from the sales perspective, for many OEMs, almost all sales happen through dealers and distributors, so understanding their concentration becomes very important. Why is concentration of sales important? Because if a very large part of our sales goes to a small number of dealers, distributors, or big customers, we become dependent on them. If one of these major partners walks away, or if the relationship sours, our revenue can drop significantly. Think of an automobile OEM. The OEM sells cars to dealers. Dealers sell cars to final customers. If the top 10 dealers account for, say, 60 or 70% of the OEM sales, that's a high concentration. BRSR Core wants that to be visible to investors and stakeholders. Even for a component supplier like ASK Automotive, the same concept applies. A large share of sales may be going to a few OEMs. Disclosing sales concentration gives a clear picture of this risk. Now let's come to the third piece, related party transactions, or RPTs. BRSR Core asks for 4 ratios: purchases with related parties over total purchases, sales to related parties over total sales, loans and advances to related parties over total loans and advances, and investments in related parties over total investments. Related parties usually include group companies, promoter entities, key managerial personnel, and their related companies. If a high percentage of our purchases, sales, loans, or investments are with related parties, it doesn't automatically mean something is wrong, but it does mean that stakeholders should know about it so they can judge whether transactions are at arm's length and whether there could be any conflict of interest or risk of misuse of funds. So this disclosure is all about transparency in dealings within the group. Let's put all three elements together. Concentration of purchases shows how dependent we are on a few trading houses or intermediaries. Concentration of sales shows how dependent we are on a few dealers, distributors, or large customers. Related party transaction shares show how much of our business and financial flows happen within the group. From SEBI's BRSR core perspective, all of this links back to Principle 1. Businesses should operate with integrity, transparency, and accountability. When companies disclose these numbers, they give regulators, investors, lenders, and rating agencies a clear view of their business relationships and any concentration or related party risks. To summarize in one line, openness of business is about how open and transparent we are in our purchases, our sales channels, and our related party dealings. Next, when you work on this BRSR core question in your company, think beyond just filling a table. Ask yourself, do we know who our key trading partners and dealers really are? Do we understand how concentrated our purchases and sales are? And do we have full clarity on our related party transactions? In the next session, we can look at how to collect this data from finance and procurement teams and what common mistakes to avoid while filling this part of the BRSR core template. Thank you for listening.